which countries have an embargo? Right? Who's allowed to buy that oil? This is important because at the end of the day, what you're having is you have these countries that are essentially not allowed to buy the oil from Russia, and yet they're doing it, specifically India, and they are buying that oil, but it's not like they're not allowed to buy that oil. Okay, that's quite okay. It's just that, frankly, the U.S. administration said to them, "Stop buying the oil. Don't do it. Don't do it." Because you're helping fuel the war. Now, like I've told you before, this is not really about. It's not about the oil itself. It's not about the war in Ukraine, right? At the end of the day, what the administration is trying to do, the administration is essentially trying to pressure India in many ways. It's trying to pressure India in actually not buying oil, but really they're trying to pressure India in other ways, which has to do with the fact that they have a close relationship with China and India. He's trying to break them apart. That's one thing. But more importantly, also trying to get into the Indian market, which is very protective of its agriculture, for example. So that's what they're doing. But at the end of the day, what India said, but hold a second here. Everyone is buying oil from Russia, even from Iran, and it's a fallacy to try to control us because even the European, and I will show you, even the European are buying Russian oil. What are you talking about, the European? Well, so who's allowed to buy, first of all? Right? Let's find out. First of all, who's allowed to buy that oil, right? And right now, the people allowed to buy the oil depends on where the buyer is located. European Union and G7, E7 are not allowed to do it. So there's a ban on Russian oil. Direct imports are prohibited from the European Union, from the G7, and from the allies. There's a ban on refined petroleum products. There's a price cap system. The G7, the EU, and Australia have set a $60 barrel cap on the seaborne Russian crude and lower cap. So shipping, insurance, and finance services can only be used if the oil is sold at or below the cap. So you can technically buy that oil. This is important because what it means is that Russia could go on for a while with this war, right? They could go on and they could go on essentially because because that's all they have to sell, really. Russia only have oil to sell, okay? To make money from the outside. So the second thing that I think you need to understand is that countries outside the sanction allowed buyers. Okay, who are these allowed buyers? Well, these countries are not part of the embargo cap, so they can legally buy Russian oil. China is the largest buyer of Russian oil. Now, it is quite interesting that you have this BRICS situation going on with people that are allowed to buy the oil and people that are not allowed to buy the oil. But basically, countries such as China is the largest buyer of oil from Russia. That keeps them very tight. Okay, that keeps them very tight indeed. India is the second largest buyer, and what we are finding now today is that there is a tremendous amount of closeness, increased closeness between China and India. India is the second largest buyer, often refining Russian crude and re-exporting the products to Europe and elsewhere. That's why Modi said he said, but when we're told don't buy the Russian oil, they said, well, hold on. You're kidding me. I mean, why should India not do it while everybody else is doing it? Everybody else is buying Russian oil. This is a world that you're living in, and this is a world that I want you to understand. It is key for you to understand what's happening here, because that's going to dictate how long you think that war with Ukraine is going to last, because Russia still is making a tremendous amount of profit from that oil. Okay? So India is the second largest buyer of refined Russian crude and is re-exporting the products to Europe and elsewhere. Turkey, major buyer of Russian oil. Middle Eastern state, other Asian state. Russia, domestic and friendly market. Russia itself obviously buys lots of oil, but it's states around them. Belarus, Kazakhstan, Armenia. So even Western countries indirectly consume Russian oil via refined products. It's a fallacy to think. Remember in 2022, when basically they outcast Russia and they said, you know what, we're going to weaponize the dollar against you. We're going to nobody's going to ever going to be buying the oil from Russia, and we are going to go after you, and we're going to make your life very miserable. Okay. What really happened then? Well, there's loopholes. Even Western countries indirectly consume Russian oil via refined products made in India, Turkey, or elsewhere. Ship-to-ship transfers and blending can origin very hard to trace. So that means if you're thinking about Ukraine situation in Russia, that is going to go a long time, because Russia does have the wherewithal to finance itself. And even if they've been taken out the entirety of the BRICS system, they're able to find the cash to keep it going. So be careful. You have to understand that. So you see how long, because you keep hearing that Russia is not doing well, Russia is losing money, Russia is going poor. Hold on, right? The bottom line is this: the EU, the ES, the UK, Japan, Canada, Australia are all not allowed to buy, while China, India, Turkey, and Middle East are allowed to buy. But unfortunately, when we're saying allowed, what are we really talking about? Well, countries that have an embargoes, right? For example, that they're not allowed to buy the oil, have workaround in shipping, finance, and trade practices. For example, the shadow tanker fleet, blending of rebranding oil, financial channels outside the dollar systems, insurance loopholes, third country routing. Oil passes through middlemen hub like Malaysia, Turkey, Singapore, and then it finds its way eventually. Shipment may officially leave Iran, stop in Malaysia, and are re-documented as Malaysian oil before heading to China. Sanction oil trades on at a deep discount, $15 to $30, giving buyers like China a strong incentive to accept the political and logistic risks. Right? They're selling that oil very cheaply. So then it behooves you to try to get in there and get some of that oil. So the result is, even under embargo, Iran, Russian oil still export millions of barrels a day, China being the largest buyer. So what are we saying? Well, essentially, it's becoming a very difficult world. It's becoming a world that essentially it is difficult to control. You cannot control that environment. And it's important because the U.S. is trying to control India, for example. And because of the proximity of these countries, it is becoming very difficult to tell them, don't buy the Russian oil, buy the other type of oil, right? And by doing that, unfortunately, they are losing control about a very important items that they have. For example, how Asia is coping with Trump's tariffs. Right? If you want an education as try to change the game in international trade, just take a look at Southeast Asia. As part of this supposedly reciprocal tariff policy, they slammed some of the highest import tariffs on goods from Southeast Asia. These countries are paying a tremendous amount of tariffs. Not all of them right away, but how long is that going to last? You have to understand that right now, most of them are not really paying. I mean, the tariffs are being paid. Well, hold on. India, Wednesday is a very important day for India. Well, because that's when the tariffs are supposed to come in. It's about to come in. India is going to hit with huge amount of tariffs. And they are depending 30% of the oil. India's oils come from India, come from Russia. It's a very important item to talk about. So what is India doing? Well, India and China mend ties amid the Trump tariff threats. And this is the trick with those tariffs, is that while they may bring a lot of money to the U.S., they may bring some inflation at some point. They are, causing quote-unquote investment into the U.S., but they're also tightening up the relationships with these other countries. New Delhi is having a tough time with China, and right now, a Chinese foreign minister met with Indian Prime Minister Modi in New Delhi on Tuesday. How interesting. Okay. In its visit to India this week, China top diplomat said the two Asian nations should deepen cooperation amid international threats to free trade. Referring to the U.S., both countries have faced hefty tariff threats from Trump over their trade policy. You see what's happening here? That's the unintended consequences of such tariffs. Now, how much of that is going to be relevant, we shall see. But essentially, the nations are seeking to move ahead with a difficult period in our relationship. Differences must not become disputes, no competition, conflicts. Okay. On Wednesday, Wang also met with the Indian Prime Minister Modi. A lot of these countries are getting closer together independently. Canada is starting to look outward to replace the business that they used to do with the U.S. Now, the question has always been, well, at the end of the day, you can't eliminate the U.S. It's 25% of GDP. Yes, that's true. Right now, you can't, because it takes time, because they were all surprised. Nobody prepared for it. But eventually, they will be able to sustain. They will, in fact, they're already doing it. China right now is meeting with India. And don't forget that on Wednesday, those tariffs are hitting. I think the India tariffs are set to hit on Wednesday. So essentially what you have is you have yourself a former quote-unquote friend that is being hit with 50% tariffs. Right? The second wave becomes effective August 27th. Certain goods already in transit or enter before that date may have a grace period, with the tariff applying instead for September 17th. We're getting close. There was a 25% territorial tariff on August 1st. Then there was an additional, so right now they're paying 25%, now they're going to pay an additional 25%. And the grace period is up to September 17th. And do you see anybody discussing? Do you see anyone talking to India right now? From the U.S.? No. But India is talking to China. And the idea of all this, from the U.S. administration, they're trying to keep these countries away from China. But are they able to do that? Are they able to sustain it? Obviously not, because they're getting closer and closer and closer together. Now you have to understand that India, the reason why India has no choice is because they are using 30% of their oil they're getting in from Russia. So what do you want them to do? You want them to stop buying oil from Russia, and then you want them to open the agricultural, because agriculture has a 39% tariff to the U.S., so that you really can't compete with, because India wants to keep its farmers busy, obviously. So you want them to get rid of their farmers and having them compete with U.S. farmers, and you want them to stop buying anything from the U.S. That is a big ask, I have to say. That is a big ask on the administration. And the reason I'm saying that is because what the U.S. is pressuring on, I believe, and it is a strategy. What they're doing is they're pressuring essentially the idea. What they're doing is they're pressuring these countries. Now, you're saying, well, I mean, there's a reason why they're doing it. They're not doing it for fun, trust me, right? They're not doing it for fun. What they're doing it is, if you take a look at the tariff, for example, that India, because what do you have with India that's going to force them to go along with you, right? Because don't forget, the tariff Indian tariff on the U.S. is about 39% for agricultural goods and 13.5% for non-agricultural goods. So I think what's happening is the U.S. is trying to go after that 39%, but that's a tough sell, because Modi needs, that's an electorate that they need, right? The farmers, they're not going to just disappear and say, you know what, we'll do business. Let's open our borders to the U.S. That's a tough ask. Well, then say that's fine, but then what does the U.S. has on India, and I will tell you that they have quite a bit. Okay, India. I mean, the Russian oil that India is getting is critical. It's critical. Okay. In 2023-24, Russia replaced Iraq and Saudi Arabia in India's largest crude supply. At its peak, Russian oil made up to 35 to 40% of its imports. That's a lot to give up. If tomorrow India says, you know what, no more Russian oil, the economic impact will be tremendous, right? Because obviously now you have to buy. Don't forget, they buy the oil at a discount. You're going to have to buy at a higher cost. Strategically speaking, India would lose a key energy buffer in global geopolitics. Sudden loss of Russian barrels would strain the global oil supply. I mean, it could gradually do it. Global prices stabilize and slowly it moves around, but not stop using it right away. That is difficult. So, and of course, to make matter difficult is Modi saying, listen, not just us are buying the oil, right? A bunch of other people buy this oil that you don't want me to buy. And that's not fair for us to do it. Now, what I wanted to tell you is about what is it that the U.S. does with India. And I think that's important for you to understand. What do they need, right? This is what the hold on, I can't find it. Because GDP, 50% tariffs on India. Okay. India's reliance on the U.S., and that's what the U.S. is banking on, right? In terms of the U.S. is India's largest trading partner. It's larger than China, 128 billion. U.S. companies are major investors in India, which is true. Technology, India depends on the U.S. tech firms for its infrastructures. It depends on its defense and strategic alignments, educationals, immigration. So India does need the U.S., but what the U.S. is asking for India, which is basically give up your oil and give me access to your agricultural market is a very big ask. Now, of course, then the alternative for India is to just say, you know what, let me get closer to, and that's going to make things even worse. Now, you would imagine the U.S. would know that, you know, maybe that's a little bit of a big ask for them at this point. You know, India is less reliant on the U.S. on the energy, agriculture, military autonomy, but the U.S. has a huge trade deficit with India. For example, in 2024, the U.S. good trade deficit with India reached approximately $45 billion. What are we trying to say here? Well, what we're saying is the tariffs, while appearing to have immediate positive spin for the U.S., stock market is up, inflation is not seen, economy is doing great. What you're not seeing, although I'm going to help, hopefully I could show you through my life, but what you need to see is that this whole the paradigm is shifting. Now, you could say that that's because of the tariffs. No, probably not. I think this was started a while back now, where the U.S. has been slowly losing ground to other countries in terms of its dependence in industrial independence. It's only 20% of the economy, but it's an important economy. So it's been dropping very slowly. So what the U.S. has done is gone after the tariff as a mean to just shake everybody else and come and do business with me, basically, and come invest in the U.S., more importantly, so we could build on our own. But that paradigm doesn't really work because what you're asking of them is just not possible anymore. You could tax them, and you could use the only thing that the U.S. has to use against these countries is the fact that the U.S. GDP is 25% of the world. So you're using that, and you're saying, do business with me. But the other countries are saying, well, you know what? I was going to leave you anyway. Now you're just making it, you're precipitating it, basically. And specifically, I'm talking about China, India, and probably Russia now, because, I mean, what the U.S. is asking of Russia, even to stop the war itself, it's going to be very difficult to achieve. And having the Ukrainian in there trying to, get back what they had, and the Russians saying, no, I want to keep it. In fact, I want more. And you know what? I'm a war economy, so I don't have to stop, quite frankly. I could go on going and going and going, and you're not going to stop me. And who is going to stop me? The European, they have no power. The Chinese are on my side. In fact, they're helping me. And the Indian obviously need my oil. Maybe my relationship with Trump, maybe that could, but that's not going to hold, right? So what you're seeing is a world that is moving very fast, and it's changing structurally. In the U.S., for example, you're having there's a lot of issues, for example, on the unemployment figure, because there's less and less and less people joining the workforce. There's not enough people being born in the U.S., and because there's a clamp down on people coming into the U.S., that could have a potential impact in the future. I did a live in terms of the Social Security, and you should know that Social Security in the U.S. is paid with the people working. They didn't put the money aside for you. Just want to let you know, they didn't put the money aside until you come back it's paid on using the payroll tax, 6% payroll tax. You pay 6%, the government pays 6%, the company pays 6%, and all that. And that's what feeds the Social Security system. But as people in the U.S. have less and less children, and of course, what's happening is you're reducing the amount of people coming to the country. That is pressuring. And the reason we could tell this is happening is because we're seeing a very small amount of people actually jobs being created. The May number, the June number, July number weren't that great. But yet the unemployment rate doesn't change much. So you say, well, there's no problem. The unemployment is great. Well, yeah, the only thing is that means that there aren't that many jobs around anymore, and not enough people to get those jobs. So obviously unemployment doesn't change. So that may not be a good thing. I mean, we'll find out later on. But there's a paradigm shift there. And then, of course, a paradigm shift with all these other countries, which are frankly, apart from Europe, that just, as you see, they all went to Washington trying to climb onto Trump and say, okay, maybe this is how we deal with him by yesing him. You could see that what happened with India, they're basically saying, no, I mean, I'm going to be talking more to China. I was talking to them anyway. I am not going to stop that. And my tariffs are not going to change that much. I mean, I could do some back. I cannot do anything with the agriculture. Okay. And the U.S. obviously is going to have an issue with that. Part of my collection. And trying to spread the good word here. And I will tell you, things are moving fast, very fast. The clock and what's happening is at the end of the day, the clock is ticking for the U.S. Hopefully by now you realize, because obviously the administration does realize that, and they are trying to do something about it. But unfortunately, they realize that no one is listening, and that is a problem. Now, how long is that going to last? We shall see, right? But what I want to say is this: at some point, they're going to have a problem. At some point, this whole paradigm is going to. It's not for Monday morning, but the way I'm looking at this thing is I see them all moving very slowly, and it's changing, right? They're not listening to you. They are not listening to you. They're not. They're doing business with themselves. Right now, the Chinese are meeting with the Indian. Of course, you're going to say, well, what do I care? I'm in the U.S. How is that going to impact my job? Well, it will impact it, right? Because you're losing the BRICS. The BRICS is getting closer and tighter together, and at some point, once they are close enough and they don't need the dollar to trade, then they don't need the U.S. And then they're closing the doors and they say thank you, right? And right now, the only people that are, as you could see, the only people that are really truly talking to the U.S. Who's talking to the U.S.? It's really the European. They came over and they say, come on. Let's do something. The only problem is when they come over, what they do is they are patronizing Trump, literally sitting around that table and say, "You're great. This is fantastic. We're going to do business." And he says, "Yeah, no, you're great. No, you're great. No, you're great," because they want him to get in there, and they want the U.S. to get between Ukraine and China, but between Ukraine and Russia, but the U.S. can't do that either. So it looks like the options are closing in. The only thing that the U.S. has playing is the fact that it has a tremendous amount of buying power, and it's powerful right now. But by using it and coercing that way, and you could see, I mean, maybe it works at the end of the day, because at the end of the day, don't forget, we're talking $4 trillion in tariffs. So it depends. You have to pick your battle. You have to decide what's going to work and what's not going to work. Now, for example, yourself, if you're working in industries, then yes, that's going to be a great deal, because right now, a lot of money is coming to the industries. For example, look what they're doing with Intel, right? Basically, what they want to do, they're saying the government is going to buy 10% of Intel. It's not buying; it's actually using the money that Intel was getting anyway from the Biden era, and it's going to say, well, it's not going to be a grant; it's going to be equity. We want that money in. So you have that. You got that going for you on the Intel side and on the corporations trying to. So money is going to come in, and at the end, money has to come into the industrial sector, because they realize not so much that the industrial sector is getting weak, because like I said before, the U.S. Is slowly the clock is ticking for the U.S. So, but that's okay, because they knew this was good. That was a risk they took originally by exporting all the jobs, right? And and the U.S. becoming more efficient, more service economy, and let the other people build the stuff. The only thing is, as they realize that no, what's happening is not only we're making less stuff, and they're making it for us, but we are dependent on them, and they may not be our greatest friend anymore. So what's the next step after that? Well, they could stop reducing your access to what they're producing and that you need. No, but that wouldn't happen. It's happening right now. It's happening right now with rare earth mineral in China. They are reducing the amount of rare earth mineral that are coming in from China. They're not closing it completely, but they're just making sure that especially the magnets, you're not really getting the magnets, because they don't want you to have magnets, because the magnets are used in weapons. So overall, the same way, China buys what the West bans, which is, they're buying Iranian oil, they're buying Russian oil, right? Not this ban for them, but I will tell you that even the European are buying oil, right? Basically, we have Europe, and how do they do it? Well, basically, countries under embargoes often use rare amount of shippings, finance, and trade practices to keep the oil flowing from China, for example. They're using shadow tanker fleet, blending oil. They're doing a bunch of things. The point is that oil is coming in. Now, they're doing business with each other already. And that's a worrying sign that all these countries are dealing with each other, they're selling with each other, and they're not listening to the U.S. anymore, and not that much. Don't forget, on August 27th, making sure I get my date here, yes. On August 27th, 50% tariffs on India. 50% tariffs. Do you hear them? Do you hear Modi coming over like the European, sitting at his desk? He's sitting at the Oval desk, where the European was sitting in front of him and the president sitting behind. Do you see Modi there? Do you see the Indian there? They're pissed. The Indians are very upset. Now, you shouldn't be surprised that they're upset, because you're going to tax them 50%. Right? You shouldn't be surprised, because you're going to tax them 50%. The only issue is, why are you targeting India at 50%? Because I want them to stop using the oil from Russia, because I want them to do more business with us, because I want them to keep away from China. But I don't believe that all these things get done just by that 50% is going to resolve everything. I think for you to get this thing done that you're trying to do, like stop using the oil, get closer to us, right? What you need to do is you really, instead of going after the Indian students that are trying to come to this country and looking at their social posts to limit, because a lot of Indian students come to this country, maybe you need to negotiate, you need to talk, you need to spend more time, but they don't have that kind of time. And that's what they're using, this coercive technique. And I think what's happening in this process, you're getting them closer and more farther away from you. And that's going to be a problem long term, because, how do you bring these people back? I mean, India, and India is an important aspect, because it's a big, it's obviously part of BRICS, but you probably already lost China. Russia, there's nothing you could do with them. You're not doing trade with Russia. The only one that's kind of still quote unquote liked you was India, and but the pressure they are under is humongous. And how long is that going to last? That is going to be the question that we have. Why is this a big deal for China? Let me tell you, for India is suffering right now, and the 50% tariff, this 50% tariff on India would be a real growth headwind, and it's happening this week with the bigger hits to export-heavy sectors. So what's likely to happen in India for the near term over the next 12 months? I mean, if I did the calculation, I'm sure somebody else did, right? 0.3 to 0.6 percentage point shave from GDP growth. It's going to hit the key export segments like the textile, the jewelry. The pharma and the phones are not included right now for obvious reason. Because otherwise you don't get your pharma. Don't forget, the U.S. gets 100% almost of its antibiotics from China and India. So pressure profits and jobs in exports like textile and diamonds and apparel. It's going to market and currency effect, equity sentiment. It's going to impact the stock market in India. Over 12 to 36 months, trade diversion. New Delhi is pivoting in 50 alternative markets. Supply chain rethink, policy responses. So instead of saying, okay, I'm going to come to the table, what India is doing is say, okay, you don't want me, I am gone. That's a problem. But I think at the end of the day, all three of these countries were going to go on their own anyway. Russia is doing lots of work in the Red Sea right now. They're doing with the China Sea. So right now, what do we have? Who's meeting with whom here? I'm pretty sure that there's a meeting between India and the Chinese foreign minister. He's on visit to India this week. How coincidental, you would say? It's happening in front of you. You just have to know how to read it. Analysts had said that the slow but steady improvement in the China-India relations could gain momentum from the trade war kicked off by the U.S. administration. I mean, 50% is a trade war. The countries recognize they may need to lean on other trade relationships to fend off heavy damage for the economies. They're getting closer. They're getting closer together. Is that the intent of those tariffs? Because I think something needed to be done because they were getting closer anyway, but maybe the tariffs are just too coercive way of doing it and are making things a lot more difficult for these countries to do it. I mean, Trump and his action may have given it greater sense of urgency than before. The India trade relationship is at close to 130 billion. It's roughly the same size as the U.S.-India trade. But India buys far more from China than it does the U.S. So this is, unfortunately, this is happening as we speak. Right now, they're meeting, they're talking. Obviously, the good news is, the market in the U.S. is doing well, but be careful because right now, and that's why I want my subscribers, but more importantly, my members, to follow the market and understand and to take advantage of that. There's another article that came out that says basically Modi's aids new energy in push for Latin American minerals. So Modi last held a new energy and New Delhi relationship with the entire Latin America. What does that mean? Well, basically they're going to look for somewhere else. We need more help. We're going to go outside. Latin America has the world's largest lithium reserves, and India is pushing mining groups to pursue reserve in the lithium triangle, Argentina, Bolivia, and Chile. So it's moving away, and I mean, it's not coming to the U.S., okay? In fact, India hails improving ties with China ahead of the Modi Xi Jinping meeting. So India is going to be meeting. They're going to be meeting with each other very soon, and that's going to be very interesting. China and India have achieved a new environment of peace and tranquility. It's over. I mean, it's started. Let's put it this way. Okay, maybe it's not over, but it started. Okay, it started. And where is it going to end up? That's a question we want to know. We want to know, where does this all end up? Because it would appear that it's all over, right? It's all over for the U.S. And maybe what I mean, it's all over for the U.S. It's all over for the U.S. to try to recoup that relationship with India. The quote unquote relationship with China has been given a 90-day reprieve. That's gonna, who knows where that's gonna end up. And the if you could call it a relationship with Russia is nowhere to be seen. I mean, you're not gonna be able to do business with them. This is a whole different ballgame altogether. So basically, the only thing that the U.S. could do right now is really start building, bring all this stuff back as soon as you can to make it here. Why do you think the administration is having a 100% tariffs on semiconductors? Because they realize, they said, we're running out of time. We got to do something. Stop it now, right? If we're going to go down, we take them down with us. I mean, that kind of mentality. Fortunately, that's precipitating the event. They're getting further out and further out than you are. So we need to monitor this carefully. Why? Because it will impact jobs in the U.S., obviously. Right? Well, if you can't sell your products, because if you're weakening your clients, quote unquote, right? Because right now, India is going to take a hit. We're also importing from India as well, although there's more export than import. But if you're weakening everyone, then nobody's going to buy, and that's also going to weaken you as well. The only issue is in the U.S. keeps on going strong. And that's what the administration is showing. It says, listen, look at my business, look at my people. We are able to buy lots of stuff. But I want to use that to bring this business to the U.S. Is that going to work? That is the question. Because ultimately, if it doesn't work, then you get shut out of the market, and you also don't make anything, and then you're going to be dependent on others. And this is how wars are started. That's a concern that I have. Has it happened before? Yes, it has happened before. It has happened. What do you think Japan started the whole World War II situation? Because there was an embargo by the U.S. onto Japan. They needed to get out, so that the way they got out, they start fighting. What do you think happens if they tell the U.S. consumer, you know what? You're not going to get any more antibiotics. You're going to go and get it. You're going to fight for the antibiotics, because you're going to pay extra. That's the risk that we have right now. Is that this entire situation is morphing into something else. It's morphing away to something else. Well, obviously, the three largest countries: China, India, and Russia. If I forget them, then you've got, of course, you've got South America. Look what's happening with Brazil with 50% tariffs. So you probably lost them as well. Not a big customer, but still. Then you got Europe. The only one that you can have maintain a relationship yet is with Europe. But is Europe really doing business with the U.S., or is it catering to the U.S.? Right? Are they really with the U.S.? Because they realize that maybe the way to deal with the U.S. is to cater to their whims and say, yeah, you're great, this is fantastic, we're doing good. But are they really, and frankly, even Europe just realized that, I thought we had 15%. Well, not exactly. You have 15%, but you have still 27% on the score because you haven't completely everything. That's right. I mean, the U.S., Europe, for example, let me get you the fact, but Europe is having a bit of a situation because they thought they were going to get 15%, but they don't. What was it? They basically had a situation where they still have to pay the 70%. So this whole tariff thing is moving in ways that we have to be very careful how it ends up. And basically, you're going to have blocks, right? As long as nobody's fighting is one thing, but keep in mind that wars have started for less than that. Okay, so lots of interesting topical coming up over the next couple of days, And I want you to be part of that. I want you to understand what's happening, and that's what we are going to do.